Hello everyone and welcome. My name is Thea George and I'm Director of Research at Finextra. I'm delighted to welcome you to this live webinar on transforming your infrastructure to enable digitalisation, brought to you by Finextra in association with Sienna. I'm going to be your moderator for the webinar, and we have an excellent panel of expert speakers lined up for our discussion, during which we'll explore the progress of digitalisation across financial services, the opportunities and challenges banks face, and the implications of digitalisation for bank structures. I'm going to introduce to you our speakers in a moment, but first I'd like to make a couple of logistical points, if I may. We do have the facility via the webinar platform for you to ask us questions for the panellists, so please do make use of this facility. We may not be able to get through all of the questions, but any that we do, I will pass on to the panellists where relevant. Secondly, I just wanted to let you know that we'll run the webinar for 45 minutes, maybe a little longer. So let me move on, as I said, to first introduce the panellists. I'm delighted to welcome Gunnar Berger, Head of CM Solutions at Nordea, Sophia Wikander, Head of Business Innovation at Nordea, Keith Saxton, who's Chairman of Tech UK Financial Services Council, Duncan Ellis, Head of Global Market Development and Consulting at Sienna, and of course myself, Thea, as the moderator. So as promised, a really good lineup of panellists there with a great range of expertise on this interesting topic. So I'm looking forward to a very good discussion. To kick us off, I'm going to turn to Keith first, if I may. Keith, could I just ask you to spend a few minutes outlining your assessment of the challenges and opportunities of digitalisation from the perspective of banks' infrastructures? So Keith, over to you.
Thea, thank you very much, and hello to everyone. So let me try and take a few moments, as Thea suggested, to sort of set this up for the broader discussion. So digitalisation is not really brand new, is it? Because money's been digital for quite some years. But here we're talking about the progression of technology, progression of the needs and demands of the customer to really try and drive some new digital services to enhance our sort of banking experience. When it comes down to sort of the infrastructure, we sort of tend to get lost in a sort of a world where people don't really want to address that, right? So this is the plumbing. It's sort of something that people put up with. It's not always perceived to be the first thought. But I think we're at the stage where both from a technology point of view and both from an industry renewal and industry competition, all the opportunity that's out there for new services, we've come to a point where you can't really, unfortunately, any longer ignore the infrastructure challenges. And so from a Tech UK point of view, we've been on this story for some years, that we've published a few papers in the last few years on the need for infrastructure renewal. And of course, it's tricky, it's challenging, there's a lot of complexity in this, so it's easily said but not easily done. But the most recent paper we wrote was really called Taking the Initiative, and I think this is sort of where we are right now. There's no shortage of things we could do. Every single one of them is a challenge, and of course there's some cost implied, but there's also plenty of benefit. But just really to sort of try and frame this, I think there's probably three areas where we might look at transformation taking place. Firstly, I think we're all fully aware of the need to sort of try and improve customer experience, creating sort of the technology foundations for us all to be able to promote and provide those services out to the clients to improve satisfaction, deliver new product, all the things that are sort of very popular and attracting a lot of attention. The other second point, I think, is really all about the better use of data and analytics to improve performance and experience in actual fact. So to really maximize the value of data that's already collected, to really try and understand that, to create more sort of customer-friendly, customer-relevant sort of opportunities, as well as sort of looking at the regulatory side and having that data available. And at the end of the day, this clearly provides a degree of cost-cutting opportunity. And then the third challenge, which is probably the harder one, is really how do you transform core systems? And in the olden days, we'd talk about this as a rip and replace program, or we'd talk about building sort of new extensions to so-called legacy systems. Both of those things, in my view, are really not the right answer anymore, unfortunately. We're at the moment where the technology industry is changing as rapidly as the financial services industry. So there is a moment in time here to really take a strong look at the need to finally move away from legacy systems, much better use of cloud-based services, API, a lot of outsourcing to utilities, shared services, to really try and improve the processes and share some of those common processes to really get the organizations and industry into a much more agile and flexible shape. So out of those three areas, you'd sort of very rapidly move into some sort of recommendations. One would be, obviously, again, easy to say, but a more decisive and faster rate of change. We've been talking about some of these issues for some time. There are plenty of things that one can address with sort of mature technologies. The real depth of the plumbing problem tells us that we need to up the speed of how we embrace the change. Secondly, I think obviously one can never completely future-proof the strategy, but we need to be looking further forward and try to understand what's going to really be capable from technology in the next 5 to 10 to 20 years, and really start to build the systems to take advantage of those technology advancements. Thirdly, it's all to do with reducing complexity. I think out of a lot of these systems, it's probably well known that the current costs are largely in the complexity of a lot of siloed systems, and in order to sort of get off that complexity, it really some degree of simplification has to take place. That would call, therefore, for a more structured approach to some sort of technology renewal. This has to have senior management support. It has to be holistic, in my view, across an organization. Yes, of course, one has to do it by business units, and inevitably there will be a degree of dealing with silos still, but it has to go right across the organization. And then finally, perhaps not quite as well thought through, is really, well, how are we going to do this really with the policymakers and the regulators who continue to sort of oversee the industry, and a degree of collaboration is probably necessary in those areas. But I think that probably sets the tone for a really sort of a framework discussion on how we might start to think about improving the infrastructures.
Thank you, Keith. Excuse me. It certainly does. Thanks very much indeed for setting the scene so yet concisely. That's really got us off on the right footing. You've obviously raised a number of topics that we'll drill down into more deeply during the discussion as we go, both from a kind of driver perspective and an infrastructure, more detailed perspective. I'd like, if I may, to spend a little time at the beginning on a topic that you alluded to at the end there, working with the regulators. Clearly, regulatory requirements are a kind of major factor driving change in the industry, and certainly driving the competitive landscape in which banks need to digitalize and need to operate digitally. I'd like to spend a minute in that vein or two talking about PSD2, which I think is clearly up there with one of the most influential pieces of regulation in this area at the moment. And I'm going to turn to Sophia first, if I may, to ask. Sophia, could you just spend a minute outlining how you think PSD2 is impacting and will impact banks' sort of strategic thinking around digitalisation and beyond, in the next couple of years? Sophia, please.
Thank you, Sia, and hello, everyone. Yes, PSD2 will certainly impact the bank's strategic thinking going forward. In fact, PSD seeks to improve the competition by opening up payment markets to new entrants, and all banks need to be aware of that, obviously. Because it will be a more equal playing field now with new payment service provider that will enter the payment landscape. Some of them have a far better infrastructure than we have as banks. They don't care our legacy. We need to partner up with them in order to utilize their part in parallel with modernizing our own infrastructure. Another big change that we clearly see is the change of the customer behavior, where the PSD2 will enable them to give a third party, for example, a retailer, access to their bank accounts and also permission to execute the payment or transaction on behalf of them. That is a clear game changer, not so much for the consumer as such, if you're used to online shopping, but for the banks, that would have a high impact. A third thing that I think is important to bear in mind is that the account information will now be accessible, so that can be placed into an open space where you can see the access to accounts from all your banks, and that is something that we as banks need to be aware of and hopefully utilize. So all of this, I think, it clearly shows that we need to revise our current business models, utilizing customer data in a much better way than we have done before, in order to both retain and gain market share in the new payment field. And I personally think that the access to account is probably one of the biggest technology innovations for the banks now, with which require us to have an open API structure, which I know Gunnar will talk more about.
Thank you, Sophia. Indeed. So yes, Gunnar, could I ask you, in fact, to follow on from Sophia then and talk a little bit about open banking and open APIs from an infrastructure point of view, some of the work that you're doing around that currently, Gunnar. Thank you.
Yeah, thank you for that. Yeah, the interesting thing, a perspective with PSD2 is that when we started the discussions around it in the banks some years ago, it was totally from a threat perspective, seeing the massive coming of non-banks that would suddenly have access to the bank systems and would be able to place themselves in between the banks and the customers and so on. But lately, the discussion has sort of changed, and it becomes much more of a opportunity for banks now, because we are starting to see that finally we will be able to open up our system. Finally, we will have the right to do it. And if you see it from that perspective, it's a huge thing that will happen to the bank. It will be a tremendous opportunity to extend the product reach through other digital channels, or to actually extend the digital footprint by letting them white label their products in our digital channels. And for us, I mean, we have been living now for many years with the ledger systems, with mainframe technology, with very long release times and so on. What we are looking at now is the possibility to create a totally different technology environment where we can actually utilize external developer communities, get the share of the innovative capacities of fintech companies and so on, in order to support our customers in a much better way and be much more agile and fast in changing. So more concretely, what will happen is that the banks that really want to be or stay in this game now, they will have to, well, it's not a new technology with APIs. We have been using APIs internally in the banks for many years, but now we will have to open up our firewalls and be able to communicate externally with this technology, and it will very much lift the kind of interaction and integration we can have. If you think about it today, if we want to integrate closely with an ERP vendor or something, we are talking about file transfer, we are talking about delivering data in batch mode. With APIs, we will lift this communication to a much more online and real-time level, and that will open up for becoming much more, optimizing the experience for the consumer and also in the future for the corporate. So we see great opportunities in this.
Thank you, Gunnar. That's very interesting. Duncan, can I turn to you and ask from your perspective, your thinking around the implications of the move to open APIs and open banking for banks' kind of underlying network infrastructures? Is this something you're much looking at, Duncan?
Absolutely. It's a really interesting question because if we start to think about what's been happening, recently in the banking world, and probably one of the biggest trends in the last few years has been the move to mobile apps and giving people the ability to access their account information directly from their mobiles. And even that simple change has had some serious ramifications. And probably the biggest one is the fact that people are now checking their account information a lot more frequently. Now, as an individual, that doesn't sound like it's a great big deal. But when you have hundreds of thousands of customers who are suddenly increasing the number of account queries that they're generating, and you're trying to deliver that over an infrastructure that was designed and built for a different way of working, you suddenly start running into issues in terms of access, in terms of processing capability, in terms of connectivity. If we then move forward with this PSD2 and opening up the network so that we have our account information service providers or the payment initiation service providers who can now come into the bank's internal systems and generate more of these queries, more of data being accessed with very little control over the size or the number of requests that are going to be generated. And in fact, from one point of view, the more requests, the better, because that means your services are popular and are being utilized. But you have to really consider how that is going to impact on the infrastructure that you have in place today. And we can look to some of the other industries who've had this type of transition to see what they've done. And obviously, the big ones are probably some of the internet content providers who have actually re-engineered or engineered a new way of designing IT systems and connectivity. And you might be familiar with the terms of web scale. So the idea of building a modular component type infrastructure that is programmable, that is scalable, that is automated, and having the network infrastructure to support that so that you can cope when something goes viral. And an example, simple example, you might have seen recently that there was a mother in America who posted a little video when she bought a play mask, a Chewbacca play mask. Just a little bit of fun. She was so excited. She got in the car, took a little video and posted it on a Thursday. By Saturday, it had had 105 million views. 2 days and it went viral. Now, I'm not trying to suggest that some of these services will have that level of impact, but it's a very clear indication that you can't control the amount of exposure that a new service is going to have. So when you think about your internal systems, you've got to think about how do I ensure that I've got the right connectivity into data centers, that the data centers are able to support and process the amount of queries, but also there's new problems. So when all of these account information service providers, the payment initiation service providers, all these other third-party processors, they're now coming in from an external source. So you've got to think about security, you've got to think about scalability, and things like the quality of a connection, the ability to process all those demands have a direct bearing on the customer experience. And if you can't process and fulfill those requests in the time scales that the end user expects, then in this world of open APIs, it's going to become increasingly easier for them to move to someone who is. So whilst we're thinking about PSD2 and we're trying to get our heads around all of these changes, it's important to come back, as Keith said, and really think about how am I going to implement this on today's infrastructure, or what changes do I need to make to that infrastructure to give me the flexibility to support it in the future.
Thank you, Duncan. I like that anecdote a lot, and I also like the fact that you've teed up a couple of good other topics that we're going to move. I'm going to wrap up the PSD2 specific conversation by turning to Keith. I'd also like Keith for you to do two things for me. We've had a question come in around, I guess this is, impact on business models of PSD2 and sort of how far it can go. And the question is, when, if ever, bank selling off its balance sheet, letting go of its deposit lending is serving and advising customers, is a question that we've had. So I wonder if you could muse on how far you think we might see PSD2 change business models, but also just give a brief thought on how well you think the industry is getting ready for PSD2 from what you see at the moment from this kind of infrastructure point of view.
Yes, thank you. So I think, well, let me try and simplify, because clearly there's a huge amount of complexity in delivering PSD2, and of course that's just starting really. So we've had a number of years warning really from the regulators and indeed from the inability of banks to create new services, that there's a single thread running through all of this, and that's data. So in any respect, any organization that can't expose the data, doesn't have the data, can't maximize the data, can't secure the data, is really not going to be prepared at all. And so to me, this PSD2 actually is just you might call it petrol on the bonfire, right? So there's plenty of warning signs that infrastructures need to be renewed, and we need to look at that data as it travels holistically all the way through a system, and we don't need to sort of duplicate that. So standards play a big part here. I think so far the dialogue on open banking APIs has been very good, but I have to say in the UK I think it's been somewhat less than ambitious enough, and we've sort of tried to prompt a little bit more aggression in terms of the amount of data that's going to be freed up initially. Of course, it also coincides with the GDPR, General Data Protection Regulation, coming from the European Commission. We may not care too much about that in 2 weeks' time, but that's another story. But the point is, there's a lot of complexity in trying to fully create, correct services. So technology is available to do that. I think it's a common theme here that there is, so for today, for example, I can go and do a lot of the things that look like I've got an open API, but I know for a fact in the background it's chugging away, as we've said, on batch systems and sort of things that don't really run very well. To get to the cost of being able to do this, this is a simplification exercise. I would suggest there is more than enough room for what I would call efficient fintech, as opposed to, very sort of single fintech type stuff, which is just simply reimagining new services. So getting into the heart of infrastructure renewal and sort of really exposing data for many, many reasons is really something. I think the PSD2 is just simply another big suggestion that we need to get a move on and start to take it seriously.
Okay, thank you, Keith. So PSD2, I think we've done pretty thoroughly, and we've been talking around open APIs and the kind of increased sort of, I guess, online transaction expectations and how infrastructure will cope. I want to move on to look at customer experience, customer requirements. This has been alluded to by most of you already so far, and think really about the kind of omni-channel aspect here. Experience tells us that one channel rarely completely replaces or eliminates its predecessors, and in fact you end up with the multiple channels, and this omni-channel demand or desire of customers is one that we hear obviously more and more about. So I'd like to drill down a little into that and ask really Sophia, if I may, first around one aspect of this, and that's what you think might happen or will happen to the branch in this kind of digital age, and how you're sort of factoring that into your thinking around innovation and around digitalisation. So Sophia, please.
Thank you, Thea. One can argue, of course, if this digital age is the end of the branches. I don't think so, for sure. But I think it will change, and we already see that. We have less and less branches, and they have clearly changed what they service the customers with. For example, there's rarely any cash going around anymore, not in the branches. And in some societies, for example, in Sweden, the use here is almost cashless. So that is a change. But I do think that there are areas where the customers still would like to have some personalized advice, and that could be through any channel, but that includes also the branches. It could be important life decisions like taking, your first housing mortgage, or talking about pension investments, etc., where they really would like to go into the branches. But what I do think that they require once they come in there is that there is a seamless connection to all the customer activities, meaning that the employees in the branch need to have access to all of the customer data to follow the customer journeys that they're doing from a more holistic perspective. And that, of course, puts a high demand on the technology also in the branches and the background system and infrastructure in order to connect all the aspects of the customer's transaction and banking experiences.
Indeed, yes. So thank you. So what about another channel in the omni-channel mix then, mobile? Gunnar, could I go to you and ask how you're sort of thinking about mobile in this digital world? Is there still much more to think about and do from a consumer or indeed corporate banking perspective on mobile in your view? Gunnar?
Well, it's obviously so that some years down the line it will all be mobile. I mean, it's difficult to imagine now because we are pretty much still sitting at our desktop solutions. But if you just imagine yourself what has happened since 2007 when the first iPhone was delivered to the market, it's an immense change, and I can hardly buy a bottle of wine anymore without having to review all the what is said out there on the internet and so on about that type of wine. So I'm much more, much more knowledge about whatever I buy every time I buy now, and I have it in exactly the instant when I need to buy it. And I mean, this is a trend that will just continue. I've been asking now. We have a group of treasury customers that we used to have a strategic roundtable with, and I started asking them some years ago, what do you think about mobile solutions for corporate treasuries? And 90% said no. First time I asked. Last year, 50% said no, and I'm pretty certain when we ask this year again, the positive answers will be bigger, and so it's slowly coming also to the high-end clients and to the traditional corporate services, and that's of course quite natural because I mean, if you think about the consumers who have changed their behavior, when they go to work, they can be working at treasury back office or at the share service center and whatever. And of course, they will not just accept to go 20 years back in time and work with some old stupid interfaces just because they are sitting at work. They will be a tremendous force for change at their workplaces. So I think this will go quite rapidly in all instances, not only the private life, not only on the consumer side, actually everywhere. And I think that we as a bank quite soon, also on the corporate side, need to think mobile first, desktop second. So that's what I see. And with mobile, we mean several kinds of mobile ways of connectivity. Not only the smartphone, we're talking about wearables, we're talking about other stuff. We're talking about things we can't really imagine yet either. But just look at the gaming side. Just look at the way the kids interact with the computers and so on. There is a lot of things that will happen still.
Indeed. So Duncan, from your standpoint, what are you thinking about omnichannel in terms of the implications for the network and for the infrastructure? Is this majorly on your mind?
Absolutely, and I think it was very interesting listening to Sophia and Gunnar, who are both, I think, showing different sides of the challenge. So to my mind, omnichannel is all about delivering that same experience to the customer, whether they're a mobile user, whether they are using apps, whether they're using the web page, or whether they're walking into the branch. And I fully take on board the points that Sophia was making about the migration of a branch from being a transactional place of business to a consultative place of business. And I think even as mobile becomes more pervasive, when it comes to those big life decisions, people do prefer dealing face to face. So I think there's absolutely going to be a place for bank branches at that level. And in fact, that's a absolute unique selling point that some of the established banks have over some of these new online-only banks that are coming to the market. But when we think about omnichannel and actually delivering that experience, it is all about having that same data available no matter how you interact with a bank, as Sophia said. Now, the only way to really do that effectively is to centralize. So we see more and more focus on pulling core systems back into the data centers. Now, those can be the bank's own data centers. They could be cloud-based data centers, but you're centralizing all that data. Once you've done that and you've separated your customer or your employee from the data, then the link and the access to that data becomes critical. And that's what generates the good customer experience. So you centralize to have that single repository to be able to have all of the information about the customer's journey. But you have to be able to deliver that to the people who need it in a timely manner and with the availability that they expect to have that warm, comfortable feeling that the bank is looking after them correctly. And when we think about that, it places huge strains on the infrastructure. A typical example, every time you send a query to a data center, however many bytes of data you're actually asking for, that's actually going to generate somewhere between 10 and 100 times the amount of traffic going between data centers as they process that request. So that core infrastructure has to be able to, deliver it effectively over the network to the bank branches, but more importantly, to facilitate that flow of information and the processing between the data centers to get the response back in a timely manner. And then we start adding on, the ideas of using data into analytics to better predict what customers are interested in. When we think about the use of beacon technology down in the branches and being able to customize the experience for the customer as they walk in by detecting their mobiles and perhaps push customized advertising or promotions to their smartphone, all of that is great for enhancing the customer experience if you do it well, but you have to be able to support it effectively. Otherwise, your attempts at generating a good customer experience can actually come back and bite you.
Indeed, that's useful context, actually, Duncan. Thank you. Okay, so I want to move a little further into our discussion then and pick up on some topics that, again, have already been raised and are clearly very pertinent to the discussion. And talk a little bit about sort of trust and security and cyber and fraud and those aspects. So, we know that post-crisis banks still have a trust challenge with their customers. Yet we also know that the developments like PSD2 are going to require them to open up that sensitive customer data to third parties, and that in itself creates some questions. The data protection was mentioned already, and then of course we also know that the cyber threat is simply increasing all of the time and putting more and more pressure on infrastructure, reputation, everything. So there's a lot of dynamics in the background there to manage in the context of this part of the discussion. I'm going to go to Gunnar first, if I may, and ask, what's your thinking around security in the context of open banking, open APIs, the PSD2 work you're doing? Are you much concerned about the security aspect?
Well, that's the issue, if I may say it like that. I mean, that's the tricky part to solve. Letting then third parties access your bank data on behalf of you, and then trying to understand or secure that it's on your approval or with your approval. And I mean, we obviously need to trust the third parties. I mean, we are giving them access to your account. That's unavoidable, and technically they can. So there will be a need to limit what they can do. There is a need for quite huge technology sophistication here in ways of securing that if they should be on the rogue side, that they cannot create too much damage, as simply put, because they will be many, they will be granted access by the law. We are not mandated to require agreements with them and so on. So there is a challenge in this, and I'm pretty certain that if any consumer's account is emptied and so on, it will be the bank that has to sort of cover it. So we need to secure that that we know what's happening, that we know who is sort of logged on, that we know that they cannot do more than what the end user has approved and so on. And that is a technical challenge, and we are putting a lot of effort into that right now, but we are also quite certain that we can solve it. We have talked with the people in Australia and those countries that has been doing the API technology for a while now. So we are pretty well on the go.
Okay, and that's encouraging. Sophia, could I turn to you then and thinking a little bit more broadly around the kind of trust question, and if you could share a bit of your thinking around how you're ensuring trust, or how you will ensure trust, customer trust, in this kind of digital innovative age.
Yes, I think, in the world of connectivity and also with the regulation that Gunnar gave an angle on, I mean, trust becomes premium. So I think it requires that companies reinvent how they communicate and to their customers in relation to trust, but also how they lead internally and set their strategies. And I think there are a few areas that I want to mention specifically. One is, which we already touched upon briefly, is that the customer needs to feel a trust in how we're using their data. We have seen examples a few years ago where banks have utilized data in a way that they felt were okay, but the customer clearly showed that they were not satisfied with the utilization of the data. And I think now with PSD2 and the collection of data that becomes available, I think that will be even more important to follow. Another area is obviously, how our solutions are working, that we have secure authentication and authorization processes, both for our household and corporate customers. That will be even more important when with this omni-channel perspective, where you can log on anytime and anywhere. So the backbone solution needs to be secure as such. Then I think that a third thing that is important is that we as banks need to educate our customers so that they adjust their behavior to meet the new digital age. I just saw an example from Sweden, where they expect that within 3 years, the average Swede is expected to have 4 devices connected to internet. And they're not talking about smartphones or tablets, but other devices in order to home security related to your fridge, your car, but obviously all of those things will be somehow connected to payments. And there I think the biggest risk might actually be the customer behavior. And we need to be ahead of that and educate our customers in order for them to treat their transactions with care.
Indeed, as I often hear said, the human being the weakest link in the chain there. that notwithstanding, there's obviously a technology and an infrastructure side to this question as well, Duncan. What are your thoughts on the sort of implications of digitalisation around trust and security, cyber, those aspects?
Well, I think if we put to one side for a second, technology per se, the whole idea of trust is really going to be the single thing that either makes or breaks PSD2. Because for all of the regulation about what has to be done and what has to be put in place, if the customers do not trust the process, if they do not trust the system, they're not going to use it. And without that use, then we end up spending a lot of money without actually being able to deliver anything. So we have to take this whole idea of trust and security extremely seriously. And we can look back over the years, and we've spent a lot of money, a lot of time, and a huge amount of effort in trying to build perimeter security. So to secure every single access point into our internal network. And despite all of those resources, we've failed. And we've failed time and time and time again. But we are making it harder, and we're making it more secure, and it's getting better every time. So now what we're seeing is that the hackers are trying different ways. So we saw recently that rather than trying to hack into a bank through its perimeter, we saw the SWIFT network being accessed through an access point by hackers promoting a different way of accessing. So what this has been driving is a move now away from perimeter security to a more holistic practice. So really trying to understand where all the potential weaknesses are in the system and to put in appropriate levels of security wherever it makes business sense. And there's always a risk-cost equation that needs to be balanced there. But we also need to bear in mind that technology has moved on. So some of the capabilities that people might have looked at in the past and decided were too expensive have now got to a level of cost and in some ways more importantly simplicity to implement that makes them much more relevant. We then think about what's happening in the regulatory world. So we're all very aware that GDPR is coming in over the next couple of years, being authorised, going to be rolled out by 2018. And a key part of that is about the data breach notifications, where all breaches have to be notified in 72 hours or less for certain breaches. And more importantly, there's significant fines for failure to do so. But one of the key aspects of that regulation was the area about not having to do notifications if the data that was breached was unlikely to cause any risk to individuals. Well, encrypted data has very low risk. So by encrypting at all levels and securing every part of the network, you're taking away a significant risk from the establishment. The other thing that the GDPR did was put huge focus on privacy by design. And again, when we look at the privacy by design, it fundamentally highlights the fact that networks, as they stand today, are extremely vulnerable and are almost impossible to physically secure against surveillance. And they actually go on to say, therefore, any information from a user to a service or between users should preferably be encrypted using modern cryptographic techniques. So we can now do that very cost effectively, very simply, and actually provide an infrastructure that guarantees that even if your physical security is breached and somebody taps into your network, the data that they access is encrypted to such a level that it is effectively useless to them.
Okay, again, that's reassuring. Okay, guys, we have a few minutes left. I want to pick up on the last section, really, of our discussion and do a little bit of thinking about the future. And if I could sort of ask you in your answers to these questions, guys, to sort of talk your sort of closing thoughts as well, because we'll get to the end of this section and then I think we will have to draw the discussion to a close. Excellent though it's been, we do need to stick to a timetable. So future-proofing is what I want to talk about. And Keith, I think this is something you mentioned right at the beginning in terms of the recommendations that you raised around, really having a strategy for transformation and thinking ahead with that. Could I just ask you to briefly revisit that topic, Keith, and just remind us sort of what some of the watchwords for future-proofing a digitalisation strategy might be, and I guess, key leaving thoughts around that for the audience?
Yes, for sure. So, of course, history is not a very good marker for anything that may happen in the future, but we can learn some stuff. And quite recently, there's been some focus on some research done by a professor at New York University, which was also recently discussed in The Economist, around the fact that the real cost of a financial transaction in many complicated measures has not really improved since the 1880s. Now, if you sort of use that comparison against what the cost of a car would be today, if we had that same process in the automotive industry, we'd probably be paying about £2 million for a car. So the real issue for the financial services industry in general, I think, and for the organizations in there, is to really try and understand from the business model down what's really going to drive the need for these sort of coherent, agile infrastructures. And of course, we've spent a lot of money and time in the past of building competitive situations within each and every organization for processes that aren't really differentiating. And that really isn't going to hack it going forward. So really the future-proofing is coming right from the very top, which is, it's very well known that the changes to regulation have increased capital requirements, et cetera, so therefore the business model's changed. People are not making the same ROE that they have in the past, and as a consequence, they've only got a few levers to pull. One of that is the cost. We know there's a lot of embedded cost in the complexity. If you started with a blank piece of paper, you absolutely wouldn't build the systems as complex as they are today. And you can't point fingers at people and say that was wrong. That's just how this industry's developed over the years, based on sort of silo products and M&A and all the rest of it that we fully understand. So going forward, I think you've really got to start to think about, there are some very, very effective technologies that are available today and have been available for some time. This is not all about the killer app. It's not all about putting everything on the blockchain. But if you think of the security conversation we've just been having there and the cyber conversation, we can start to move APIs to being autonomic APIs where security will be inbuilt. They'll be self-mending, they'll be self-healing, they'll take instruction and update. So, you can start to do some very different things with the capabilities we already have. This is really the point of the future-proofing. Nobody has the time or the money to do the classic 3 to 5 year rip and replace of a core banking system. This is modular as we go forward. It has to be interconnected. It's all based on increasingly open standards, which sort of frightens people away a little bit. But in terms of just being able to imagine micro cloud-based systems with APIs to unlock a lot of this legacy data that's stuck in old systems somewhere within these organizations and across the industry. It's really a more coherent opportunity than it is a cost control. And I think, unfortunately, budgets tend to get set and then cut really on an annualized or even quarterly basis. And there's not many guys out there who would say, they're going to be around in 5 years' time to take on, this big rip and replace. So I'm just really calling for the use of existing technologies that you'll be able to build out new capabilities, leveraging all the fintech capabilities as we go forward, because the current situation is unfortunately long gone.
Okay, that's clear, Keith. Sophia, can I come to you for the last time in the call and ask how you're sort of viewing future-proofing when you think about innovation in Nordea?
Yes, I think tapping into what Keith said, there are massive opportunities out there, but time and cost is obviously an issue, and speed seems to be the mantra at the moment. Things are moving really fast, and that tends to potentially misdirect the energy and attention to events that might not be significant. So I think for us, it's very much a matter of a lot of collaborations across banks with fintechs and other partners, trying to utilize technology, but still cater for that we also use what we have in the bank in regards to data experience, etc. And try to really understand and equally be attentive to the speed of any change and the significance of what that change would be. So to understand that and really try to see what are the actual significance of this technology or this new fintech or customer pattern, and is it worth for us to invest in it? It might sound a little bit boring and non-innovative, but I think that is the path going forward in order to stay focused, but still really be open to all the new opportunities that are out there.
Yeah, that makes a lot of sense, Sophia. Thank you. Gunnar, do you have anything to add on this sort of topic of future-proofing around the area you're working on and in the open banking context? I guess the whole point of open banking is that it's the future. Do you have any thoughts around sort of protecting that strategy going forward?
Yeah, well, I think we need to get an understanding for what will banking be about in the future. I mean, there's a lot of things that will go away that we have seen. There's a lot of things that can be done by others. So what is actually the unique selling point for a bank? What is it that we can provide also in the future, which we do better than the others? And my strong belief is that is about trust. And I mean, we can trust Facebook and Google and also with a lot of things that is not so very valuable. You know what we did, what we ate for dinner last meal and so on. But when it comes to money, it's a totally different story. You can't trust anyone with that. And I think to create trust requires a lot of investment. In a digital future, it will all be about having the right infrastructure and system technology in place to guarantee trust, to guarantee security against fraud and all that stuff. And I think that's the future for the bank. That's the outset we should have, that we will be the trusted providers. I think we in the future will be some kind of marketplaces where others can actually sell their services, and those services will be bought because they are utilizing a trusted marketplace or platform. So for us, it will be very much, we will be very much in favor of opening up and getting together with others and seeing ourselves as the one making it happen.
Okay, cool. Thank you. And Duncan, last words to you. If you could give a brief answer on this one in the interest of time. What are the watchwords for future-proofing a kind of a strategy around infrastructure readiness for transformation?
So I was really taken with the analogy that Gunnar gave earlier about the iPhone. And I think, in a way, APIs are the iPhone moment for the banking industry. And when the iPhone was first launched, we had no idea of what it would be used for and what the apps would be that were available would come. And I think very much in these early days now of APIs, we don't know what is going to happen in the future. And this idea that Gunnar mentioned then of a bank becoming a trusted authentication of a person using the KYC processes in place is really interesting and could be a fantastic opportunity for a lot of banks. But the key thing is, it is the unknown. So that means that when you are trying to develop an infrastructure to support that technology, as Keith was saying, you've got to use the modern techniques that have been built by people that face these sort of challenges every day. So that's web scale, that's utilizing DevOps so that you're progressing at the speed of software rather than the speed of hardware. So it means that your infrastructure has to be able to support the security, the scalability, the availability, programmability, and increasingly automation and orchestration to take humans out of the equation as much as possible, because as we've mentioned on a number of points, they are frequently the weak link in the equation.
Okay, a good note to end on this, thank you. So at this point, I'm going to draw the webinar to a close. We went on a little longer than planned, but I think it was worth elongating the discussion to get all of those good points in. I'd like to remind you again, everybody, that you can listen to this a second time if you'd like to, because the webinar will be available on demand within 48 hours, and you can use the same link that you used to join today. Of course, please also do encourage your colleagues to listen in the on-demand mode. So then all that remains for me to do is to thank the panelists. Thanks, guys, for all your hard work and the great discussion. I think you have worked very hard. And thank everybody else for listening to us. Thank you and goodbye.